Hello, and thank you for joining me today. I'm excited to have the opportunity to speak with you about such an important topic, fraud prevention for nonprofits and community groups. Fraud is constantly evolving, and staying informed is one of the best ways to protect your organization and its resources. Today's session, Get Ahead Fraud Prevention and Detection, will provide you with practical insights and tools to help you recognize, prevent, and respond to fraud risks that can impact your work. Before we dive into the topics today, I'd like to take a moment to introduce myself and share a bit more about Alterna Savings and our commitment to supporting nonprofits and community organizations. To give you a little bit of background about myself, I'm Fahima Kareem, the account manager for not-for-profit and affordable housing members at Alterna Savings. My journey with Alterna started while I was a university student working with a group that provided financial education to students in underserved communities. That experience introduced me to the world of co-ops and cooperative banking, which ultimately led me to this role where I have the privilege of working with community members and nonprofit organizations every day. At Alterna, I'm part of the Community Impact Team, where our goal is to empower and support our members through programs and resources designed specifically for underserved and underrepresented individuals, organizations, and communities. I'm truly excited to be here today and to connect with you all in this capacity. Now let me introduce you to Alterna Savings. We are a full-service provincially regulated credit union and a cooperative financial institution that's existed since 1908. We are owned by our members, giving them a direct voice in how we operate. As a member, you play an active role in shaping the future of Alterna, ensuring that our focus remains on your financial well-being and the communities that we serve. At Alterna, banking goes beyond transactions. It's about having everything you need to manage your finances while experiencing a truly different way to bank, one that puts people and communities first. We work with many nonprofit organizations, not just because we are a cooperative, but because we share community values and a commitment to stronger communities. Through our specialized financial products, impact loans, and grant programs, we help organizations access the tools they need to grow and serve their communities effectively. Our impact speaks for itself. Over 4,600 nonprofits and charities trust us as their financial partner. Since the year 2000, we've issued more than 1,500 impact loans, totaling $9.9 million, and since the year 2012, we've contributed over $4 million to support affordable housing initiatives. Beyond financial support, we believe in empowering organizations through education, and that's why we offer financial education webinars and workshops, ensuring that nonprofits and individuals alike have the knowledge that they need to make informed financial decisions. Before we dive into today's session topics, I wanted to take a moment to highlight Alterna's commitment to community impact. Our Community Impact Team is dedicated to supporting the well-being of our members and the communities that we serve. One key focus is our Community Financial Resiliency Program, which I manage, aimed at strengthening the capacity and resilience of our nonprofit, charitable, and affordable housing members. We also have our Community Microfinance Program, which helps address financial inequalities by creating loan fund partnerships that support personal and small business financial independence while reducing barriers to banking. Another important area is our Community and Financial Inclusion Granting Programs, which provide funding to community-based organizations to help sustain and grow the programs that they offer. Finally, a key part of our impact work is through our Community Financial Education Program. We provide financial education programs and resources tailored to the specific needs of the individuals, organizations, and communities that we serve, like today's session. All of these programs are available online, and you can find out more details by visiting alterna.ca. Now that you know a bit about me and about Alterna, we can get into today's session. I'll be talking to you about fraud detection and prevention, some common misunderstandings and real-world scenarios that nonprofits and community organizations face, and the steps to take if you suspect fraud. This topic has become very essential as an education piece for our nonprofit community members, especially with the rise in fraud attempts over the last few years. Fraudsters are becoming more sophisticated and harder to detect, making it crucial to stay informed and proactive. Some of this increase is linked to economic uncertainty as well as a rapid shift towards digital operations and AI-driven tools in the workplace. While these advancements bring on efficiency, they also create new vulnerabilities that fraudsters are quick to exploit. By the end of today's session, I hope you'll feel more confident in recognizing potential fraud risks and taking steps to protect your organization and its resources. Before we go any further, let's start by defining what fraud actually is. Fraud is a wrongful or criminal deception intended to result in financial or personal gain. Now, it's important to define what we're exploring and to know what to expect because half the battle is understanding what's out there. When you know what to expect, you can be proactive in identifying and avoiding fraud attempts rather than reacting after the damage is done. So who commits fraud? The simple answer is that people do. Fraud can happen in many ways. It can be done by employees, it can be done by management, board members, or external scammers. With technology advancing, fraud is evolving rapidly and new tactics are being used every day and developed. Fraudulent communication can come in different forms, like phone calls, emails, text messages, online refund forms, letters, and more. Because fraud is constantly changing, staying informed and aware is one of the most effective ways to protect yourself and your organization. And while you can't always prevent fraud from happening, you can take steps to protect sensitive information and limit your exposure. That's exactly what we'll be focusing on today. When we think about fraud, it's easy to just focus on the act itself, but it's just as important to consider who's committing it and why, because behind every fraud attempt, like we mentioned, there's a person making a decision to commit fraud acts. The fraud diamond theory that you see here suggests that there are a few key factors that drive someone to committing fraud. One of the biggest is opportunity. If someone sees a gap or weakness in the system, they may feel empowered to exploit it. Another factor here is pressure, which can stem from financial stress, short-term cash flow issues, or other personal circumstances that push someone towards fraudulent actions. Rationalization, as seen here, also plays a key role. A person might convince themselves that their actions aren't really harmful, thinking it's just a small amount, no one will notice, or our organization has plenty of money, so it won't make a difference. And finally here is capability. Some scammers, especially in tech-related fraud, have the skills and access needed to commit fraud without detection. Fraud can happen in two key ways, internally within the organization or externally from outside sources. Internally, we hope that no one within our organization would ever commit fraud, but it's always best to be prepared for worst-case scenarios. One common form of internal fraud is asset misappropriation, where an individual steals or misuses an organization's resources. For example, someone with an organization might take advantage of their knowledge of existing vendor relationships and issue fake invoices. Another internal form of fraud is corruption, where an employee abuses their position of power for personal gain, often through conflicts of interest that violate their duty to the organization. We also see fraudulent financial statements, sometimes referred to as cooking the books, where financial reports are intentionally misstated or information is omitted to mislead stakeholders. Externally, fraud often comes from cybercriminals and scammers who target organizations in various ways. One example is credit application fraud, where fraudsters apply for credit cards, loans, mortgages using stolen or fraudulent false information. Another growing concern is online fraud, which includes phishing emails, fake websites, or account takeovers. And finally, transactional fraud involves fraudulent credit or debit card transactions or unauthorized payments. Understanding why fraud happens and the different ways it can occur is key to preventing it. By recognizing these potential risks, organizations can take their steps to proactively protect themselves and their financial well-being. Like we've mentioned, fraud can take many forms, and while the tactics evolve, there are some common fraud activities that organizations should be aware of. As listed here, these include email and online banking hacks, stolen or intercepted checks, and debit or credit card fraud. The examples I'll share today are scenarios that illustrate how these types of fraud occur. They're not specific cases, but they do highlight real risks that nonprofits and community members face every day. Under emails and online banking hacks, users of online banking services in Canada and around the world are regularly targeted by fraudsters. Online banking and email fraud can be used to manipulate people into performing actions or revealing confidential information. Fraudsters also use malicious software to remotely access your computer and information to conduct fraudulent actions without your knowledge. One severe example of an online banking hack that's not talked about as much but does happen frequently is called a ransomware attack. For anyone not familiar, to understand ransomware, which is a malicious software, we need to define the broader type of malicious software category it belongs under. It's called malware. Malware is a software that's specifically designed to disrupt, damage, or gain unauthorized access to a computer system. And ransomware takes this one step further and is malware designed to deny a user or an organization access to files on their computer. What makes ransomware particularly dangerous is that it encrypts files, blocking the user or organization from accessing their files unless a ransom is paid before they will provide a decryption key. Cyber attackers place organizations in a position where paying a ransom is the easiest and cheapest way in oftentimes to regain access to their files. Some variants pose additional threats, such as data theft, to provide further incentive for ransomware victims to pay the ransom. Ransomware has quickly become a prominent and visible type of malware. Recent ransomware attacks have impacted hospitals' abilities to provide crucial services, impacted public services in cities, and they've caused significant damages to many different businesses and nonprofit organizations. You can find news articles almost weekly of a new organization that's been impacted by an attack. It's always critical that backups are kept of data in case of a ransomware attack to protect the critical operations of your organization. Another issue we've seen is Interac e-transfer fraud, which is especially relevant for nonprofits that receive donations through e-transfers. I'll be giving you more key examples of this fraud, but wanted to bring e-transfers to your attention. In this scenario, we'll talk about a nonprofit that has an e-transfer auto deposit set up to receive donations. But at some point, that email that was associated with the auto deposit was compromised. With Interac e-transfers, as transfers are not financial institution to clearinghouse to financial institution, or rather financial institution to Interac to financial institution, when a new auto deposit is set up, it takes precedence over an existing auto deposit. In this scenario, a fraudster was able to redirect the auto deposit to a fraudulent account, and because the funds were never deposited into the organization's actual account, there was no recourse available from their financial institution. The nonprofit has to reach out to their donors directly to then reach out to their financial institutions to request that their e-transfers be returned. Because of this, we highly encourage members to review online banking daily, along with their email address support transactions that are tied to things like Interac e-transfers. Alternatively, we can also recommend using services set up through EFT, also known as electronic funds transfers, which are financial institution to financial institution, which offers recourse to have funds returned based on Payments Canada rules. The last piece I wanted to mention in this section is to warn against sharing passwords. Sometimes it can seem like the most convenient way to complete a transaction that needs to be done urgently, or that this is how banking has always been done. But if one person's email address or password is compromised, you can risk exposing the entire organization's financial accounts to fraud, making it critical to have checks and balances in place to protect sensitive financial information. The next area we're seeing here is stolen or intercepted checks. This is another common fraud scenario. Checks are still used widely for payments, even with the growth of alternative electronic payment methods. Checks fraud can still occur through three main methods. Fraudsters can steal existing checks, they can alter checks, or they can create fraudulent checks. For organizations that rely on checks, one of the best ways to protect against fraud is to reconcile cleared checks frequently, ideally daily. Some check fraud cases require same-day action to recover funds, such as stale-dated checks. So staying on top of your records is very crucial. The last area we're looking at here that we mentioned is debit and credit card fraud. Debit and credit cards provide convenient ways to access funds, but they also present opportunities for fraud. And one common tactic fraudsters use is card skimming, where they copy the magnetic strip information on the back of the card to create a duplicate. Fraud can also occur if a card is lost or stolen, particularly if the PIN has been compromised. To minimize risk, we always recommend regularly checking transaction history, ensuring that the cards are not left in shared and accessible locations, and setting up e-alerts for transactions and security notifications. Another important area of concern is corporate credit card misuse. If a staff member or board member leaves an organization, but their credit card access isn't immediately revoked, there's a potential for unauthorized transactions. We've seen cases where former employees continue to use their organization's credit cards, leading to lengthy fraud investigations to recover the funds. Ensuring immediate cancellation of cards where an individual departs is a simple but crucial step in fraud prevention. The key takeaway from these examples is that vigilance and preventative measures can make all the difference in safeguarding your organization from fraud. I want to highlight real-world common scenarios involving signing authority updates, check misuse, and email hacks. Now, these are not specific cases, but rather examples of situations that can happen, showing the importance of fraud awareness and strong financial controls. So the first example to review comes as a signing authority update. In this first simulated example, we have one nonprofit organization that's undergone a leadership change, requiring a change in their board members and signing authorities on their bank accounts. Unfortunately, in this scenario, they did not immediately notify their financial institution about this reorganization and their need for an update. And as a result, multiple checks were processed under the name of a signer who was no longer with the organization. Among these, one of the checks was later discovered to have been used for a personal purchase, a pair of skis. In this case, the organization informed their financial institution straight away, and because this type of fraud was detected before the 90-day window to return a check based on Payments Canada rules for this specific type of fraud, they were able to recover the funds as forged signature. There are also examples of less successful resolutions to this type of signing update internal fraud. One scenario we can look at involves an organization failing to update signing authorities in time, leading to disputes between outgoing and incoming board members. In this hypothetical, an organization is left in legal limbo for over 6 months while the board dispute is taken to court, severely impacting its operations. This really highlights the importance of communicating all leadership and signing authority changes to your financial institution immediately. To further safeguard against these risks, we strongly recommend requiring 2 signatures for all transactions to ensure accountability and oversight. Another common fraud scenario to review involves stolen or intercepted checks. In this simulated example, a nonprofit member kept checks in an area that was not secured, to which many non-signers had access. At this organization, the policy is that all checks need to be placed in a locked cabinet, and unfortunately, as the rule wasn't followed, the checks were stolen and issued fraudulently to multiple recipients. The organization also did not inform their financial institution until after the 90-day window had closed to return this type of check based on Payments Canada rules for that particular type of fraud. And after an investigation into this incident, the fraud claim was denied on two fronts. For one, it was past the 90-day window where the check can be returned, and two, the checks were not kept in a secured environment. Although checks are still widely used, where possible, we of course advise members to move away from issuing checks in favor of pre-authorized payment options like EFT, again, electronic funds transfers, because there's an additional check and balance in place with these kinds of services. For example, your organization issues a check, however, the recipient mentions they've lost the check. So you issue a new check and you place a stop payment on the missing check. That stop payment will be honored for 6 months, after which it's considered stale dated and shouldn't be deposited. Now, if the recipient somehow can deposit that check through the check clearing process on their end through their financial institution, the only recourse the financial institution that your organization banks with has is to return the check only if the organization notifies them on the same date that the check's cleared. So it would have to be same day where you would notice that this stale check has cleared. The challenge here is that check clearing systems are designed to be fast and efficient, primarily to benefit members by giving them access to their funds as quickly as possible. But the trade-off, however, is that this efficiency can sometimes allow issues like stale dated checks slipping through. Which is why we recommend that check balancing, if you issue checks, should be done daily to mitigate these risks. Now, the final scenario to review, we'll look at email hacks. There are multiple instances where email addresses are hacked, and it's important to have controls over emails and a system in place to require users to change their passwords regularly. In our first simulated example, we have an email that was hacked, an email address that was hacked, and the fraudster, in this case, sent the organization's financial institution a detailed email to request a wire transfer. So the fraudster provided a phone number that wasn't on file to call and verify the request for the wire transfer. Once the financial institution called the accurate phone number on file, they were able to verify that this was a fraudulent request, and the signers on the account quickly changed all of their passwords at the organization. It's recommended to change your critical passwords every 3 weeks, but it's also important to ensure that checks and balances are in place to make sure that passwords and email access are restricted only to the folks who have a critical need for it. Another consideration is that if you receive an email and you're not expecting that, you can open yourself up to fraud. The main form of this is called phishing, and phishing is a fraudulent practice of sending emails or other messages purporting to be from a reputable sender or source to convince an individual to reveal personal information like your passwords or your credit card numbers. Looking at this scenario, we have an organization that sent an email to their financial institution, and their banking advisor believed that it was from a real signing authority that they knew very well and contacted regularly. The email also included the signer's email signature, and the email looked like the email address on file. However, this email address was not legitimate. The fraudster in this case exchanged a lowercase l for an uppercase I, which made their fraud email address almost indistinguishable from the original. Luckily, the request that they made was irregular for that signer, and the banking advisor followed their protocol to call them and was able to confirm that they hadn't sent that email. Now, I had some fraudsters' favorite phishing phrases. It's a bit of a tongue twister in emails. So one of their phrases that they use, your access has been or is going to be locked or disabled. This is a scare tactic, and it can be quite effective. The threat of having your account locked if you don't immediately log in can cause users to let their guard down and to follow any kind of links in the email and enter in their username and password through a link that might not be legitimate. Another phrase is suspicious, or fraudulent activity has been detected on your account. You must update your security settings. These kinds of emails urgently ask you to log into your account and update your security settings. And they work on the same principle as the other mentioned phrase. The user will panic and let their guard down, and that's what they're relying on. Another phrase that comes up is, you've received an important message. To read it, please log into your personal portal. These phishing emails can pretend to come from reputable senders like financial institutions. Users do tend to believe that these emails are real. However, financial institutions will not urge you to log in through an email link to gain access to your information. There's always a spike in the number of tax-related phishing emails that get sent out as tax season approaches. These emails can have a variety of subjects. They may claim to be debt notifications, requests for missing documentation, notices of your right to a refund, and so on. Phishing also isn't always done at random. So spear phishing is a term used for phishing emails that are personalized and targeted. The purpose is the same, to get users to navigate to a phishing site and input their account details. Naturally, potential victims are more likely to trust an email that refers to them by their name or mentions their place of work and position or includes any other kind of personal details. Users will often provide information used in these phishing attacks themselves. So resources like the well-known professional networking, social media platforms are particularly helpful to criminals. When you create a profile, including your personal and employment information, you can open yourself up to spear phishing. So to prevent that type of attack, organizations should frequently remind their board and staff about the undesirability of publicly disclosing your personal and official information. I also wanted to address the emergence of AI tools. You need to be wary. Now, this is a new space that's opening up, a new front for fraudsters. So for example, voice-activated AI, there's been instances where a person's voice has been duplicated to make fraudulent requests seem more legitimate. Even the most popular platform available for AI asks you not to share any identifiable or personal information. These tools are being used by many to rework their documents, which can open up a new risk of information being used for fraudulent purposes. There is a relatively new fraud tactic used through texting or social media, primarily targeted at individuals, but sometimes can impact organizations as well, named the pig butchering scam. Now, you might have seen this already, so you might have received a text or a direct message like this where it seems like they've reached out to a wrong number. Sometimes it's something like, "Hi, John Doe, are you still free for tennis practice tomorrow?" The way this scam works is they start that dialogue with prospective targets, and after clarifying that you are indeed not John Doe, they try to informally start a conversation with you to build a rapport until they start bringing up finances. Now, they don't ask you for money directly, but advise that they've earned X amount of dollars in a crypto or other financial market, and they say that their target, who they've now built that connection with, should do the same. These investment platforms that they'll recommend can have great reviews, which are all falsified by fake users, which can be partially built by AI tools, creating a sense of legitimacy. Once funds are transferred to the platform, the fraudster is made out with the funds unknown to the target as they see their app, they see their funds growing in their financial portfolio. Now, this has happened to an organization before on a larger scale, where one person being compromised placed all of an organization's reserve funds into one of these fraudulent investments. So that's something to be aware of. And by learning about these examples, you can take those proactive steps to safeguard your organization and ultimately protect those communities that you're serving. Implementing fraud prevention measures can reduce vulnerabilities and help detect fraudulent activity before it causes significant damage. So here are some key steps to help mitigate risks. The first is guard your online information. Protecting your online presence starts with maintaining strong security practices. Ensure that your computer's security software is up to date and avoid entering personal or financial information on public computers, which may contain software that captures your login credentials. When you're accessing sensitive websites, always check for the HTTPS at the beginning of the URL, indicating that this is a secured connection that protects against unauthorized interceptions. Users should be required to change their passwords frequently and use strong passwords with a mix of uppercase and lowercase letters, numbers, and specialized characters. If you're frequently accessing certain websites, consider saving them as bookmarks to reduce the risk of accidentally visiting a fraudulent site. When you're entering sensitive information, you also want to look for the padlock icon in the browser's address bar. This verifies that a security certificate is legitimate. And if you receive any unexpected or suspicious message, always verify the sender through another method like a phone call before taking any action. The next practice we want to look at is monitoring your accounts regularly. Fraud detection often starts with reviewing your accounts frequently. So logging into your online banking or your mobile banking app daily allows you to quickly spot any kind of unauthorized transaction. At Alterna Savings, members can also set up online banking alerts to receive notifications for transactions or account changes that'll help them connect and catch suspicious activity in real time. The next area we want to look at is validating changes to financial data. So be careful of emails that claim that there are changes to your financial details, such as updating payment instructions or bank account numbers. Always be skeptical of attachments, links, or unusual content, and verify any changes by calling a trusted contact before proceeding. A simple phone call can prevent costly fraud attempts. Next area here is shredding sensitive documents. The proper disposal of sensitive documents is an easy but critical step in fraud prevention. Keep banking records, ATM slips, and deposit receipts until they are reconciled with your monthly statements, and then you can shred them securely. You want to store financial statements until tax time and then shred them unless they're needed for deductions. For enhanced security, consider switching to e-statements if you haven't already, which are available online for up to 3 years at Alterna. They reduce the risk of paper documents being lost or stolen. As well, you want to build strong internal policies and controls. Having internal financial controls is essential for organizations to reduce fraud risk. Every organization should separate their cash handling duties so that no one single person has full control over financial transactions. Ideally, different people should initiate, approve, record, reconcile transactions, and review reports. You also should require dual signatures for financial transactions to add an extra layer of oversight. You should set strict cash handling procedures to prevent mismanagement. You should implement policies to prevent check and mail fraud by securing physical checks and by using electronic payment alternatives. You should strengthen IT security by enforcing strong password policies, restricting access to financial systems, and implementing two-factor authentication on all critical accounts. You should regularly review financial reports to detect any anomalies or suspicious activity before they escalate. And by having these checks and balances in place, organizations can reduce their errors, but also prevent unauthorized actions. We also need to think twice before sharing your information. You want to be extremely cautious when receiving phone calls or emails requesting sensitive information. You never provide personal details unless you're certain of the source's authenticity. Fraudsters often pose as banks, government agencies, charities, or service providers to manipulate individuals into giving away confidential information. Always verify directly with the institution using a trusted phone number before sharing any details. We also want to look at filtering your phone calls. So spam calls are a growing issue with fraudsters using scare tactics or emotional manipulation to trick their victims. So you want to save your trusted contacts in your phone so you can easily recognize any legitimate calls. If you don't recognize the number, let it go to voicemail if it's urgent, and the caller will leave a message. You also want to report suspicious activity immediately. If you suspect fraud or believe that your personal or organizational accounts have been compromised, report it immediately to your financial institution's fraud center. Quick action can increase the chance of recovering funds and prevent further unauthorized access. In terms of helping to protect yourself with your organization's obligations and yourself with your own personal banking, you need to ensure that the organization's information is always up to date. So we're looking at the governance structure here, protecting your access codes, your user ID, your passwords, your PIN numbers, and ensuring that you're keeping that information secret. Never use only the displayed information to confirm the identity of a caller through caller ID. So things like individuals, companies, or government entities. This information can be altered by scammers. Be vigilant about checking your account activity and paying attention to your billing cycle and following up on any missing account statements or specific transactions. You also want to make sure that documents with sensitive information are stored in a secured place. And immediately report any lost or stolen credit or debit card to your financial institution. You also only want to carry ID that you need with you, and never write down any passwords or carry those with you as well. If you're changing your signing authorities, ensure that you're updating all accounts, not just one account. If there are third-party services that you're using as well, you want to update that. So for example, credit cards or EFT services or payroll services, you'd want to have those updated as well. When we're looking at what Alterna will do to support you as your trusted financial institution, we have many steps in place to be proactive against fraud for our members. As a member, you're giving access to certain systems to conduct transactions easily. This access includes personal identification numbers for ABMs and personal access codes or passwords for online, mobile, or telephone banking for your security. These numbers are not visible to Alterna. It's up to you to protect this information and prevent misuse. But if you identify that your organization has been a victim of fraud, the first step is to contact your branch, and they will lead you into a fraud investigation into that fraud incident. Also, if you do have a fraud incident that takes place and the amount is over $5,000, it's recommended that you file a police report. We are here to help you. As we wrap up today's session, I wanted to take a moment to bring this back to you. As a member-owned full-service cooperative financial institution, we're committed to supporting our members with the very best in financial services, including your day-to-day operations, investments, access to capital, and making a difference in the communities we serve. Our expert community-focused team has the skills, knowledge, and experience to provide you with tailored supports and services for your organization. Thank you for attending and viewing today's webinar. If you'd like to learn more or have any questions or feedback, please visit our website at alterna.ca or reach out to community@alterna.ca. We look forward to staying connected.